Okay, everybody, here we go. It's me, and you're making me smile, every single one of you. I look at this chat, and you guys are great. Anyway, look, post market wrap up. What is today? It's Tuesday, right? May 7th, 2024. I have so much stuff to cover here with you. It's pretty incredible. Let's start off with these markets so I could get my head on straight. Pretty much a nothing day, except for one thing. One. And it's getting attention even on the mainstream media. Here we go. This is just at the market close. The 10-year yield treasury ends at a 4-week low. Like I said, quiet, nothing really going on today, pretty much across the board. Bond yields continue to drop. The 10-year yield, like 4.4, I believe. We're down from 4.7 from last week. And this phenomenon could really get crazy, meaning it is potentially possible for us to see a sub 4% 10-year yield. And I'm gonna tell you something. I want to show you um, something here. And this is from a lovely, beautiful friend, the Lex Luthor, or Lex Luthor himself, out of the Federal Reserve. This is Neil Cash and Carry here. Now, for him to come out, for this thing to come out and say that he doesn't rule out a hike, it means it's not only is a hike ruled out, but they're going to pump this market so full of easy money. They're going to buy so much debt that even Lex Luthor's head is going to spin around like the freaking exorcist. It's always the polar opposite of what these things say. You're speaking about these things. How about this thing? You all remember Dallas Fed Kaplan? Well, now guess what? He's going to be working for Goldman Sachs. I mean, on a multi-million-dollar salary, of course. Could you imagine? You work for the Fed, you get to be a big shot at a Wall Street super bank, get paid an exorbitant amount of cash just to maintain your connection to the Federal Reserve. You understand? That's what this is really all about. It should make you sick. It makes me sick. This Kaplan creature, I was going to say something really, really bad. Mitch knows what I was going to say because he's telepathic or psychic. Anyway, this is what, go work for the Fed. Then you can work for Goldman Sachs and be a gazillionaire too. Imagine my shock. So anyway, yeah, this is a joke here. You do realize, and the joke is on you and the joke is on me. Now, speaking about the fact that the polar opposite of this is going to happen, let's take another look. This is the MMRI from today. All right, Mannarino Market Risk Indicator. Look at risk. We are nowhere near, at this point, a red zone. We continue to drop. Now, I want to show you something. This is a snapshot right off of my website. This is a short-term chart. See the down, 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 down. The longer-term trend, obviously, is pretty freaking ugly here. But I believe that because of this, okay, and what we already know, this is going on, we are going to see the debt market here be bought up like we've never. What I mean by that is we're going to see probably an absolutely epic rally here in the debt market, which is going to, of course, drive yields lower. And what is that going to do? Okay. Very simple. You all know what I'm going to tell you. It opens up that doorway for cash to make its way into risk assets or the stock market. The economy and the consumer are done. We got even more information about that, and which we're going to cover in just a moment here. But suppressed bond yields are going to open up that doorway, as I said, to make the way cash into the stock market. Record high, not far off here. Price action distortions. Cash is probably going to come out of commodities unless there's and I don't think this is going to happen right now. With regard to a false flag, we're already in a false flag. This war, this expansion of war, a mechanism to pull cash into the now, you all know that. Vastly expanding debt, which we don't have. We have to borrow this all into existence from the Federal Reserve and central banks. I want to show you something else here. So the White House admits that we're in a debt crisis. Debt crisis. You see that? This is from today as well. But what the White House is, they're playing the blame game. It's everybody's fault except for our loving, caring representatives, because they're the best. They're on the side of angels. The same as the Federal Reserve. Who is it? Who is it that creates all this debt? Who is it that is again utilizing the mechanism of vastly expanding the debt and creating more debt and slaves to the system? The Fed. It's their fault, colluding with our representatives. Even the White House is admitting that we are in a debt crisis, and they're blaming Gen Z is going to suffer challenges, as we spoke of earlier, because the debt crisis has been created by millennials and other generations, and of course boomers and all these other. No, it's not the fault of our loving, caring representatives. It's not the fault of the Fed, because they're on the side of angels, and you know that's true, because that's just the way it is anyway. You can expect, no matter who's selected to be the president, if Trump is selected, okay, and he's got a good chance right now. In my opinion, I've been telling you this for the longest time, that Biden, the creature thing, he can't put a cohesive sentence together. Jeffrey knows what I'm talking about, okay? Brain dead, perfect person for the job as the spokesperson of the United States. The guy is completely demented and brain dead, but that's all the story here. Trump has a real shot here, as he's saying the right things right now. What am I talking about? Talking about how a strong dollar. He said specifically that a strong dollar is hurting the U.S. economy. No, that's absolutely false, and he knows that's false. He did go to Wharton Business School. People are suffering beyond belief here because of the fact that the people are getting destroyed. Again, we're seeing inflation surge on the back of a strong dollar. Really? We're going to weaken it from here? Sure. As I said, this would be epic and beautiful and lovely for the multinational corporations. Oh, they would love this more. The 1% and 2%ers would be spraying their shorts all over the place here. Weaker dollar, bring it on. That's what they want to hear. Okay. But for the average guy or the average girl, we don't make anything in this country that we can export. Yeah, sure. Weaker dollar is good again for the multinationals because people are going to buy our products that we make. We don't make anything. Henceforth, why the trade deficit is getting wider and wider and wider and wider and wider and wider. But again, there are some people that are so dumb that have no clue that they're going to believe that the strong dollar is hurting our economy. We're going to weaken the dollar. We already know where President Trump stands with regard to rates. He wanted negative rates. We will get lower rates. So you can expect distortions to get much worse. It doesn't matter who they pick. You lose. You understand? You lose. Period. The end. We lose. Period. The end. We got to take back the system from these freaks here, all of them here. It's unbelievable. But that's a whole other thing. Now, on the this is crazy. Let me talk about this real quick. Earning a six-figure salary no longer is middle class anymore. This is also from today. Economic reality. Six figures don't cut it anymore. And that's because, again, of a strong dollar. Is that true, President Trump? No. That's because inflation has taken over because the dollar is losing its purchasing power at a record pace. We've never seen it. Becky knows exactly what I'm talking about. Thanks, Becky. And I got your back. I got all over your back. So the economic reality is you're basically complete. I don't know how many of you out here earn a six-figure salary. It used to be the dream. Oh, I want a six-figure salary. I'm going to be on top of the world. Now today, your six-figure salary doesn't even put you in the middle class anymore, and it's going to get worse, progressively worse, especially if the dollar, purchasing power. How many of you believe? We talked about this just yesterday. Do you think that the dollar is going to all of a sudden magnificently gain purchasing power, especially if Trump wins? No, it's going to go down worse. Your life's going to get a lot worse. It ain't getting better. For those of you looking for the savior deity to be beamed down from heaven, ain't happening. Just in case you're wondering about that. So this is pretty disturbing here about a six-figure salary. Now, I want to show you a couple of other things. Actually, don't hold that thought. Consumer credit. This is from today. Consumer credit growth slows sharply. What does that mean, consumer credit? It's a play on words. It's consumer debt. So the consumer is cracking. Clearly, the consumer is cracking. And not just the people at the lower rung. They're already cracked. The middle class here, they can't even hang on by a thread at this particular point. They burned through their savings. They're borrowing from their credit cards, personal debt, household debt, consumer debt, off the Richter scale. But now, consumer debt, say this thing, it's credit, but it's debt. People can't take anymore. They're done. They're absolutely maxed out. We're seeing, major big restaurants here in every major city. Their patron is falling off a cliff. The fast food restaurants, same thing. Coffee makers they can't make it either anymore. This phenomenon is going to continue as the middle class gets systematically erased. But this is a clear sign to me that the consumer is cracking. It's also a clear sign to me that you're going to see a lot more easy money pumped into this market. The illusion must be maintained. I've told you all, we have discussed it here over and over and over again. The illusion of the market is so powerful. People see the stock market. Let me show you something. I made so many of these up for you today. Where is it here? Here, 6 months of the Dow Jones Industrial Average. Look at that trend. Oh yeah, we've wavered around, but we're going up and up and up and up and up and up. For my technical people, look at this price channel. We're kind of dead smack in the middle of that price channel right now. I expect us to bump up against it and maybe even break out, because we're going to see an ocean of cash being pumped into this market. More easy money, more currency devaluation here, more war. And war is going to play a role in suppressing rates, because again, when war expands, should make sense to you, you see cash seek safety in the perceived, not real, safety of debt. And there's going to be a rally here in the debt market you're not going to believe. I really firmly believe that. Mitch knows what I'm talking about as well. So we're going to see this simultaneous rally here out of suppressed rates, any weaker dollar, purchasing power getting sucked out as people get wiped out as we move forward. Now, one other thing I want to talk to you about real quick. I want to go over this. I had some notes here. I ran this thing earlier today. 1,500 people voted. Now, thinking ahead 6 months from today, do you expect that the economic conditions will improve or worsen? 92% of you said it will worsen. 92%. 5% said it would improve, and 3% believe it's going to stay the same. It can't stay the same. It's going to get worse. This is absolutely no. So 92% of you get it. 5% have no idea what they're looking at. And 3%, I can understand why people would say that, but there's no way that I can conceive or comprehend that we are going to see things just stagnate the way they are. Inflation is getting worse. Debt is getting worse. The pressure on the middle class is going to get much worse moving forward. So just, the premise of this video is it is very possible that in the short run, I want you to think about what I'm saying here. In fact, I wrote this down. Certain things, when I see certain kinds of headlines, I write these things down. I have a couple. So when Cash and Carry here, he doesn't rule out a hike, I wrote nope. Okay. And then I wrote a rubber band. You see that rubber band effect here? What I mean is, it's very possible, because we're going to see a lot more easy money pumped in here to maintain the illusion of the market. Very powerful. People see the market higher, they believe the economy is strong. That's just the way it works. There's no connection at all. You know that. But anyway, I would expect that we are going to see, again, moving into 2025. I've been warning and warning and warning about this. 2025 to me, look, I don't think there's another guy, and maybe there is, I don't know, who's more warped than I am when it comes to this. I study the data all the time. I gather every piece of information I can possibly get my hands on, and then I look at it, and then I analyze it, and I think about what is the most likely scenario moving forward. That's how we've been staying ahead of the curve on all this with regard to everything, you and me. I mean, are we wrong? Am I wrong once in a while? Sure I am. But look back on our record. It's unbelievable. But that's only because, again, I'm warped to the point of this is all I think about, except when I'm drag racing. Then all I do is think. I don't think about that at all. Anyway, 2025 looks to me like it's going to play out to be a turning point. And I will talk more about this when we get closer. A turning point on an epic scale here with regard to everything that we're seeing. Unfortunately, it's going to unfold in a very negative way. At least it looks like that to me, and we'll stay on top of this here. But I believe that we can see a rubber band effect here. In other words, cratering with regard to bond yields, 10-year yield benchmark, keep your eyes on that. Of course, MMRI, let's talk about that. We could potentially see the MMRI, drop substantially. Where did I put this darn thing? Oh, here it is. We could see this number drop. Is it possible that we could drop into the yellow zone? It's very possible. We'd have to see something pretty substantial for that to happen, but it is possible that we could drop another 91 points here into a 200. But a rubber band effect would happen. Again, you would see bond yields drop. All it would do is provide a springboard for rates to spike, because that's where we're going here. We are eventually going to see a spike here, a sell-off in the debt market that's going to spin people's heads around like the freaking exorcist people. I mean, multiple times. It's going to rotate. And that's going to, again, wipe out stock markets around the world. This is what's being set up right now. Again, all this easy money, the devaluation of the currency by central banks here, sucking the purchasing power out faster and faster and faster, inflating the debt at the same time. The economy of the world contracting at its fastest pace we've ever seen. It's quite a scenario, honestly. This is, and again, if we get what I believe we're going to see, and we'll see how this plays out. I mean, watch the MMRI. It's all you need to watch here. Free to everybody. Link in description of this video. You start seeing this drop. You know there's a lot of debt buying going on, because the debt market is a key component to the MMRI, including the dollar on a relative strength basis here. And then this could snap back so quickly and so violently, because that's what they're going to do. It's going to be rapid. It's always the same story. When a big sell-off gets going, it goes big time, because everyone's rushing to the door at the same time. Makes sense to you? This is going to freak people out on an epic scale, people, when this does happen. But I think we covered a lot in this video. Very, very important stuff. I want to hear from you on these things. I really, really do. I want you to comment. I read through the comments. I may not answer them, but I look through the comments. I promise you that. I want to see what's on your mind. I want to know what you're thinking here. Greg, you know what? You're on target. Greg, you're so off base. And I could be off base. If in your opinion, what I've covered here in this video, and it's a lot of stuff, if I'm off base here, outline for me where I got it wrong. Greg, you're wrong because of this. I'm willing to learn. Okay, this is a collective effort, all of us here. This is a worldwide family that we've developed. Jacob, thank you. Jacob's part of it. You're all part of it here. I have axioms here. I have all my friends here. Where's Magic Mika? She's got to be here. I miss Lord Humongous. I'm praying for this guy. Please pray for Lord Humongous. I think this guy has left the earthly realm. He would never leave me like this guy. There's just no way. He was with me so many years. No, collapse after the election. That makes me off base. I think that may happen. I think moving into 2025 is going to be pretty damn epic. But right now, it's collapsing right now. If you don't see the collapse now, you're completely blind. The collapse is happening. Skyrocketing debt. Debts and deficits out of control, an economy contracting at its fastest pace we've ever seen, skyrocketing debt here at the same time, people who can't make ends meet. They're done. The collapse is now. It's no reason to look for it. Again, people who write something like Greg is off base collapse after the election, or selection, should I say, they don't understand what they're looking at. They're using the illusion of the market as their base, as their baseline. And that's what most people do. I'm glad that this person posted that, because it shows you a clear example of someone that doesn't know what they're looking at. The collapse is happening right now. The market collapse, the debt market collapse could happen moving into 2025 after the selection. We'll see where this goes, but that's how it's being set up. The illusion will be maintained, I still say that, while we move forward. You know, with the rate cut, so this is a comment here, no rate cut due to war. I don't see that. I think we're going to get a rate cut because it allows central banks to inflate. I realize that war is a major mechanism to inflate. Trust me. No other endeavor on this earth, you know that, off this earth and everywhere else, generates a need for more borrowed dollars than war. That they have in place as the Fed is tapering down their repo program. There's no coincidence here. But rate cuts here, even a small incremental rate cut, is going to make a big difference here. And it also crater the bond yields, which will, of course, inflate the stock market. It'll also do other things too. It'll inflate the price of housing as well. People love to see that. Oh, my house has gained 10 grand this month, and oh, it's 25,000 more than the month before that. They love that. It makes people all tingly everywhere, and that's what they want. They want to foster that illusion. It's paper wealth. Doesn't mean anything here. It doesn't mean a damn thing. You understand? But people feel that way. It gives them a little tickle. You know what I'm talking about? It gives them a little tickle down there. Anyway, all right, guys. I think we're going to Yeah, a little tickle down there, right? I think we're gonna get going here, people, right now. You know what to do. We're not gonna. You and I have been so in the right spots here. And I don't know, but I don't follow anybody else. It's really don't. Maybe some of you out here do, but I don't believe that there's another group of people, all of us here, who have been more ahead of the curve on all this. We're taking the right steps. We're protecting ourselves. We're people, we're men and women of action. That's what we are. This isn't for entertainment, okay? It may seem funny from time to time because I do blow my stack off, but it's not funny. People are hurting, people are suffering, and they're not going to stop. The pressure on people is not going to stop. Unfortunately, they're doing it. It's crack. The consumer's cracking, and you can see this in consumer credit. I love how they word this. If they could call it consumer debt, here, imagine they used a different word. U.S. consumer credit growth. They mean debt growth. Okay, that slowing down. The only reason why this is slowing is because people are unable to borrow anymore. They're done. This is the final stage. When you see this, it's the final stage, and we're pretty close to the presidential selection. You can see how this is all coming together. It's an incredible thing, people. It's absolutely incredible. All right, look, I'm going to get going here. Long video. Again, please comment. Let me know what you think about all this here. You understand the dynamics that are in play? That's my goal, is to explain to you what's happening so you can make sense of it, really, honestly. All right. This guy right here loves all of you from the heart. I mean that. We got to come together. I've been telling you this. Something wrong. Joe, you're awesome. You're all awesome. Every single one of you are awesome. All right. With that said, we are going to go. I will see you in the morning. So that means, what are you going to do? You're going to take care of yourselves, and you're going to take care of each other until we see each other in the morning. Thank you for being here. Thank you for those thumbs up. Let's see if we can improve on that. People, please let the algorithms pick this up. I don't know where you're going to find information like this anywhere else, I'll be honest with you. So get this video out there, share it, and I'll see you in the morning.